Good morning all, CamelbackTrading.org coming to you this Tuesday morning, January 5th. We are looking at the SPY ETF's market profile here on Window Trader. And a bunch of things before we get started. So first off, after a day like yesterday with such a large range, trend day down, the market generally tries to rest and consolidate. Right now we are looking to do that as we are trading in balance, in value, in the lower distribution. The fact that we have the Georgia runoff today, I would think the odds would arrange like we had yesterday of an inside day start pretty good. Now with the elections occurring today and no results being known until hopefully by tomorrow morning, I would say the odds are pretty good to start the day that we trade inside yesterday's range. If, however, we do take out yesterday's low, well then the previous month's low will become a magnet for these algorithms. We had an outside day down yesterday. That is bearish. We had an outside day down in a couple of the indices. Now, one thing though, I saw on Twitter somebody said we had an outside week down. Yes, we took out last week's high and closed below last week's low, but it's only one day. That's why it's a weekly chart. So I would not call it an outside week down until Friday's close, if that's the case. We had a small range last week. Now, I'm not calling for this at all, but if this market was to rally by the end of the week and close above last week's high, well, then we have an outside week up. So again, it's a weekly chart, just like in the monthly. If we take out last month's low and close below it today, I wouldn't call it an outside month down. It's only the second trading day of the month. Very, very important distinctions. Let's look at the others quickly. So the Russell also had an outside day down. Basically, we're all trading around the same area in their lower distributions. They had two sets of single prints. They're trading. Now remember, they were 9 wide yesterday. We only got 8 wide in the SPY. Triple Qs, outside day down. They also were 8 wide. They're also in their lower distribution. 2 sets of single prints. And the SPY, same thing, except the SPY and the ES have 3 sets of single prints. D, C, and B. All the overnight and pre-market is being done right above the settlement and below maybe the market's overall long. But again, it's in the lower distribution. Nothing will change if buyers do not get above M's high from yesterday, fill these single prints, and attempt to attack the upper distribution. So destinations and a game plan for this morning. So your first upside destination will be the first set of single prints at 369.54, getting filled at 82 cents. Then we have our overnight high of 369.88. Then the second set of singles, 370.46, get filled at 372.14. That's a pretty daunting set of single prints. And then the last set, 372.61, get filled at 373.11. And then we have yesterday's all-time high of 375.45. And the overnight all-time high of 376.74. For the downside, we have the overnight low, which right now is 367.63. Then we don't have anything to yesterday's low of 364.82, and then the monthly low of 362.03. So until we get more market-generated information, your downside destinations are far and wide apart. So if the sellers do decide to show up again today, we'll see how much they want to push. Now, game plan, in balance, in value, smack in the middle of M period, provides very, very poor trade location for me. Now, can you use K's low as something to lean on from yesterday? Possibly, but I wouldn't lean on it by much. For the simple fact that if you take a long against K's low and it doesn't hold, then there's nothing until the day's low, which is almost $2 further away. In balance, in value, horrible risk reward. Now, if we're to push up to M's range and fail at M's high, or take out M's high, fill the last set of single prints in D, I would absolutely take a short play against yesterday's value high and D's high. Now, the single prints above that are large, so it's going to depend on your amount of heat you want to take. Do you want to take it off above D's high? Do you want to add above D's high? Those are all personal decisions. As far as I'm concerned, I would probably start with a short around value high and D's high. I would add into it any one-time framing up into those C singles from yesterday that short would be off the table. But if we don't, I don't mind adding to them. So that would be a short play. Long play early this morning, I don't have one. Come join us at CamelbackTrading.org. You'll be getting this play-by-play up to the date. Trade ideas all morning and day. Now, let's go to the charts. So here's the key numbers that you should write down, whether you trade ES or SPY. So first things first, it's last month's low. So in SPY, it's 362.03. Critical level there. You take that out, you stop the one-time framing up in the monthly, and then the possibility of an outside month down comes in, but it's way early in the month to even say that. Before we get there, November's high of 364.38 is important. So November's high and last month's low. Now we held last November's high, rallied off that pretty damn good yesterday. See if we get down there again, what happens. Weekly, again, we're in balance in the weekly. Right now, your next destination on the weekly would be that 362.03 level, which is the monthly low. If you get below that, well, then the ultimate destination is the bottom of that 4-week balance, which is 359.17. So again, key level, last month's low of 362.03. And then the daily, this is definitely an outside day down. That's bearish. The bulls would certainly like to hold yesterday's low. Again, if you don't, here's your very visual. There's no doubt we'd be going to 362 level if that happens. And if that fails, you would then see the 50-day moving average. Good luck trading today. Have a great day, and we'll recap at 4 p.m.